you look at it from this perspective, for me, this is a trigger for two important things which will make you very positive about the capital markets. First is that this trigger will lead to a growth in the consumption, capacity utilization, and private capex. So over the next 1.5 years, the growth path is now clearly laid up, right? It may take aage piche, but because they brought the timing so fast on September 22nd, you can get a Navratri festival, a Diwali festival, and a Christmas festival, all benefiting from this boom. So this trigger is a multi-pronged trigger which will last for quite a long time. And whatever the tariffs negative effect for the year is can compensate. There is a loss of revenue to the government, but I'm sure that they have seen the calculations of how much is the surplus to the fiscal deficit, and think there is no worry about the fiscal deficit slippage, if at all. Why I bring this point is the second important point here is after the 15th August announcement, despite S&P upgrading India, despite good monsoon, FIIs have still not come to our market. They have been selling every day, little by little. Not a very huge sales, but 1,500 crores, 1,000, 2,000 crores. Every day they are selling. I hope that this will now prove the trigger, because if the government is going to maintain the fiscal path at the same time boost the consumption and the GDP growth, then our status as the fastest growing economy will be strengthened. So over a 1 year period, you have two important things happening. One, a multi-layered, multi-sector effect on the economy, and second is an FII return. See, today our market, whatever it is, there is a DII support which has kept it from falling, and little bit it rises at times when some good news comes. But really, FII coming is what will take this to the next level, like a rocket launch. So the conditions are now becoming more and more clear, right, for that to happen. Yes, the icing on the cake will be that if there is a solution to this Russia-Ukraine war, Mr. Trump and his Nobel Prize, and those things, if they come, then the gates will be floodgates will be opened. So the reason I point this out is today you were tempted, and even Rajesh mentioned okay, which sectors to look at. I would say don't bother about sectors. Why I'm saying this is very, very simple. I will give it to you. Is that after August 15, domestic fund managers already been buying these consumption related sectors. So already some amount of rally has happened. A little legs are left there. But largely this is in the price. The discounting is there. So now just going and chasing behind a consumption, you may not see. But whereas I'll point out certain interesting factors. One, you should probably look at the capital goods cycle now, because you are looking to create wealth over a year, 2 years, and 3 years.